Why are Americans skeptical about the idea of a $2,000 tariff dividend? Some recent policy discussions in the United States have introduced the idea of paying out a tariff dividend to U.S. residents, with a suggested amount of around $2,000 per person, essentially redistributing part of the revenue collected from import tariffs. However, according to reporting from VN Express, many Americans are skeptical about how realistic or effective such a policy could be. This is a proposal currently being discussed, not an official U.S. government policy. Why did this idea emerge? Import tariffs, especially during the Trump administration, generated hundreds of billions of dollars for the federal government through newly imposed tariff rates. This leads to an important question. If tariffs generate substantial revenue, should us residents share in those financial gains? That is the core logic behind the idea of a tariff dividend. Distributing a portion of tariff revenue directly to the public, rather than keeping it entirely within the federal budget. Why are many people skeptical? 1. Uncertain long-term revenue tariff. Revenue fluctuates significantly based on global trade conditions, inflation, and international policy responses, unlike income or sales tax, which tend to be more stable. This raises a key question. Could tariff revenue reliably support regular dividend payments? 2. Who would be eligible to receive it? The policy would need to clearly define all U.S. residents, U.S. citizens only. Lawful permanent residents. These legal boundaries are not yet resolved and have become a major point of debate. 3. Potential impact on public spending if a large dividend is paid out. Would it reduce funding available for Social Security, healthcare programs, education, infrastructure? Since part of federal revenue would be redirected to payouts rather than public services, supporters say the concept is appealing, but critics argue it may be difficult to sustain within the federal budget. Perspective from taxes in America. A $2,000 tariff dividend sounds attractive. Who wouldn't be interested in receiving extra money, right? However, tariff revenue is not as stable as income or sales tax. It fluctuates depending on global trade and retaliatory tariffs. Direct cash payouts could force the federal government to cut spending elsewhere or increase borrowing, creating additional risks. The policy could reshape national spending priorities and raise legal debates over who qualifies for the benefit. Your turn. If an annual tariff dividend of $2,000 were proposed, would you support it or oppose it? Would you support it because Americans should share in tariff revenue? Or oppose it because the revenue stream is unstable and could create financial pressure on the federal budget? Share your thoughts below. Follow Badger Finance. Stay updated on U.S. tariff trends, fiscal policy, and the biggest economic debates shaping America today.